When you see gold run and we're at 2,500, it starts to get kind of rich for a lot of investors. Let's call it eventually 3,000. That's going to be really, really rich when you get to these nice big round numbers. And I think you're going to see people looking at that and saying, I need to get myself some gold, but how much, what am I getting for $3,000? I'm getting an ounce. What can I get? What else can I get? And even if silver's at 35 or $40 at that point, you're getting a lot more silver for your money, weight wise and so on. I think that that'll make it the natural alternative, and that's why you see it lag, but then catch up. And then when it catches up, it does so in a dramatic way, and it tends to surpass.
At times of perceived stress or weakness in the broad financial markets, particularly due to governmental fiscal and monetary policy changes, investors seek shelter in safe haven assets like gold and silver. This results in a bull market where gold prices pick up sharply, while silver prices lag before staging an unexpected rally and catching everyone by surprise. According to renowned precious metals expert and former portfolio advisor Peter Krauth, this phenomenon is caused by the increased demand for the cheaper metal. As gold prices rise with people seeking shelter in the metals, the higher price discourages new investors who then seek an alternative in silver, causing a sharp spike in its price. After Fed Chairman Jerome Powell recently signaled that the U.S. Fed will start cutting its Fed fund rate by September, the 20-year silver market veteran wrote this in a post made on social media platform X. Silver gained more than 300% on average in the last 3 rate-cutting cycles. He also shared a chart showing how silver performed after the dot-com bubble crash, after the 2008 Great Financial Crisis, and during the COVID crisis in 2020. In each case, silver prices increased by 412%, 441%, and 143%, respectively, resulting in an average of 332%. Krauth expects a similar performance when the Fed starts cutting rates in September and resumes quantitative easing in 2025. In a recent interview with Kitco News, Krauth, the author of The Great Silver Bull, talks about the silver lag in price, increased demand from China and the global solar industry, and when silver will play catch-up to gold's performance. We will now present clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos. We appreciate the support and hope you enjoy the video.
I think that the big, portion of the demand from China really is when you look at solar panels. So China dominates solar panel production to the tune of 80% globally. And, there was, I was actually looking at a chart by colleague Tavi Costa of Crescat Capital. He puts out some fantastic work, so hats off to him. And he produced a chart of China silver imports, and it was the 4-month change chart. And the most recent 4-month change for Chinese silver imports set an all-time record level. So China is importing silver like crazy. I believe that is mostly dominated by its requirements to produce solar panels, because they're so they dominate that field. And so I'm sure there's some investment demand built in there as well. But really, that I don't expect really to slow down very much. A lot of this green transition is government mandated. If you think back to the global financial crisis, when stimulus started, if there was one thing that everyone could agree on, it was that infrastructure was something everyone benefited from. So to plow money into that, I think, is going to continue. We have talked about that before, and I think there's still a little bit of overhang left. So to try to put it succinctly, if I look back to the sort of late winter this year, I had been asked, and I was curious myself, why was silver price looking like it was capped all the time? If, we've had these structural deficits to the tune of almost 20%. So rough numbers are, there's about 1 billion ounces of supply from mining and recycling every year, and demand is now 1.2 billion ounces. So how come the silver price is not just soaring? Well, if you look at futures inventories, on the futures exchanges. If you look at ETFs, their inventories peaked right around early to mid 2021, and they've been drawn down quite consistently ever since then. We're looking at maybe somewhere around a few billion ounces almost have come out of those different areas. These what I call secondary inventories. There was a little bit of a surge just in the past few weeks in China. That's actually come down again a little bit. So I think what has happened is these big industrial consumers have bought long contracts, futures contracts. They've bought silver ETFs, and then they've gone to the issuers and said, "I want to take the physical delivery of the silver in exchange for my units." And that's how they've been able to get silver from a secondary inventory. That's, this above ground silver that's just sitting there without having to put pressure on new silver being mined. And as I say, we're down about 70% in these stocks. This can only go on for a little while longer. I'm going to guess 6 to 12, maybe 18 months. And in terms of, tapping into and draining these inventories. And after that, I think game is over. Someone's going to ask for delivery. They're not going to get delivery unless the silver price rises significantly and helps to kind of temper, this demand a little bit and reflect, a more realistic market. So, as I say, these inventories are limited. That, I believe, has somewhat capped the silver price. I think we're getting close to the end of that story.
Krauth's explanation for the lag in silver prices is multifaceted. First, there was a huge run-up earlier this year. In his words, the market is still trying to digest this significant price jump before the second leg begins. But the second leg will only take silver as far as $35 or $40 per ounce. Krauth believes the real silver bull market he and other experts have been talking about for years will not begin for another 12 or 18 months. According to several renowned metals experts, the strong demand for silver over the past few years, which has led to the Silver Institute reporting massive annual deficits, should have taken silver prices above $100 per ounce. However, secondary inventories on exchanges like the LBMA and COMEX have helped suppress prices, preventing silver from assuming its true value. Peter says these inventories will only last a little longer. He expects that there won't be any more silver to fulfill demand within the next 12 to 18 months. Peter's expectation is supported by a recent report from Canada's TD Bank. The report also predicts that the large consumers buying silver off these exchanges will deplete the inventories within the next 12 to 18 months, leaving silver free to assume its true value. When all of these inventories are completely depleted, Peter says the resulting silver deficit will be so severe that it will make headlines worldwide. Let's get back to the interview.
You look at the hedging, honestly, I was mentioning before, you look at what the commercial traders are doing, and they're net short in silver. It's not an all-time high or anything like that, but it is a multi-quarter high in terms of silver hedging. So they do feel in the near term that the silver price is still a little bit rich, and they do think it's going to come off. But I still think that, the fact that we had that big move in February, late February, silver was at $22. It took a matter of a couple of months and we were at $32. That was a dramatic gain, like 45% in a matter of a couple of months. That's pretty rich. That needed to be digested. I think that's what we've seen happen over the last couple of months. And I think we're setting ourselves up for a new rally before long.
Gold hitting new all-time highs. Are we at risk of a pullback in gold and silver stocks before the next rally? Is that what we're going to see here?
Yeah, I do think so. I really do. And, some people don't want to hear this, but I'm giving my honest thoughts. I really think that there is some risk for that. I think that it's not being priced in. Sentiment itself is not great already, so that tempers it. But I still do think we've had a reasonable move since February. It has corrected somewhat. These stocks have many of them have stayed, relatively on the high-ish end. And I do think that there is some room for them to correct before they head higher. If someone's interested in a specific name, I'm not saying that this is across the board. You have to look at each of these stocks, compare it to maybe the average for the sector. And if it hasn't had a similar move, I'm not saying that you can't or shouldn't buy into a specific name at this point. And I have actually been telling some subscribers to do that with certain names because I feel that some of them have not moved the way the rest of the sector has already moved. So there's inherent value in some of the names, but I'm cautious and I'm suggesting to buy in increments and do this in tranches. You don't need to be all in at once. and do it tactically. I think that it'll pay off. If you look at silver, really silver would need to get to 30 and stay there for a couple of days. Right now, it's actually close to its 50-day moving average. I get the sense that that's going to end up being a little bit of overhead resistance, and that it could come back down, test the 200-day, which is closer to about to 26.50, 27. And where it bottomed just a week or so ago was 27, honestly, and it actually bottomed right near that level early May. I think we could actually see one more test of that level before we get the final breakout and see it push nicely above 30. And of course, the earlier high this year was 32. That's going to be indicative of that's going to be the most clear sign, I think, of a new rally, when silver can break 32 and hold it and head higher from there. Then I think at that point, the next targets will be pretty clearly something like 35 and then 40. And it won't be all-time new territory, but it will get very exciting. And I absolutely believe that the equities will follow very, very dramatically.
Peter Krauth believes silver is in a massive bull market, offering investors a generational opportunity that only presents itself in very rare cases. Unfortunately, many investors don't yet realize the importance of this moment, the big moment before all hell breaks loose, and everyone rushes to seek shelter in safe haven assets. This is undoubtedly why iconic investors like Warren Buffett are strengthening their cash reserves at record paces, only seen during previous moments of crisis, like the Great Financial Crisis. Silver is a proven inflation hedge and a crucial industrial metal for the green revolution. It is irreplaceable in solar panels, electric vehicles, and electronics, and could offer investors a wide profit margin as it did in its last secular bull market, particularly with the rapidly widening gap between supply and demand. This is why experts like Krauth and legendary investors like Jim Rogers call it a generational play and the opportunity of a century. Do you agree with them? Please share your thoughts and comments on Peter Krauth's interview in the comments section below. If you want more videos like this, don't forget to smash the like button, subscribe to the channel, and turn on the notifications bell for more. Thanks for watching, and see you in the next one.